Hello, my name is True Demon, and I'm the Devil Stockbroker. Thank you so much for tuning in to watch this video. Before we begin, please understand I'm not a financial advisor, and none of the following content is financial advice. The following content is for educational and entertainment purposes only. Trading stock carries inherent risk, and you should always respect and understand your own personal risks when considering any investment. Please don't take what I say as gospel, and please do not trade based on the information that I receive and share through my content. Thank you so much, and have a hell of a time in the stock market. Let's take a look at RDBX. That's RedBox Entertainment. You know, the little vending machines outside of every Walmart that give you all your good flicks for your DVD player and games, from what I understand. I've set multiple levels just based on what I'm looking at for support resistance. These there seems to be consolidation occurring right here. So once RedBox gets through this consolidation wedge, what I think will occur is it will make another leg up. But we shall see. I'm targeting RedBox for a short squeeze for the same reasons that I've been looking at ATER. And I don't want to take all the credit for this. This was actually Cadude that called attention to RedBox, and he called it out way early. Like he called it down around $1 or so. Must have been like $2. Anyway, he called it early. That's the point. The short interest percentage of free float is rising rapidly. You can see the short interest is the line's much shorter, but that's just because it's got a very small float. So RedBox Entertainment is a micro float stock. This one is one where I don't think that market makers are playing in it. There's no options for this one. It's just pure shares. So this is one that I think that retail has a real actual opportunity to squeeze the hell out of this stock. This is one that I would be purchasing and expect to hold it indefinitely until the squeeze occurs. There's no telling when it will happen, but it's going to strongly depend on retail interest. The short interest keeps building on it though, and at the moment, the stock is performing very well. So although it's possible that that RedBox might dilute, I don't think they're incentivized to do it. They've got enough cash going, from what I understand, and fundamentally, they're just undervalued. This stock is way undervalued. I believe that their market cap. What's the market cap on this stock? Let's see. Inspect overview. RDBX. So RDBX has it's got a total of 12.6 outstanding shares. Their float is only just under 3 million, and they have more than 1.2 million shares sold short. Currently, the float, quote, held by institutions is over 100%. What I think that is, the reason I think that is because of warrants. So warrants are technically not, they're authorized but not issued shares. So institutions can hold warrants that exceed the float or exceed the outstanding shares. But anyway, that's just something to take note of. For whatever reason, I'm not seeing the market cap here. Let me pull up TradingView and I can take a look at the market cap on this one.
150 million.
Thank you very much. So as I understand it, the market cap is way undervalued because the assets that RedBox holds, just in hard assets and valuation, are well over $1 billion. RedBox has been around for a very long time. They have enough assets in their hands that they have enough assets in hand that they could just start selling vending machines and have cash, and it wouldn't be they would still have cash to burn. Not that I think that they would, but like just in terms of their actual assets, they have plenty of them. The other thing with RedBox that I think is actually a factor that's not being paid much attention to is the fact that Netflix is just tanking. Netflix has taken a huge beating recently, so I'm going to put their chart up here and compare them.
Just to point out, RedBox has a pretty gnarly head and shoulders pattern in the hour.
Yeah, I do see that. So if RedBox does end up breaking down below this, then I'll expect downside to
$2 really.
Yeah. The price scale got messed up for me, so I'm not sure what this is at currently.
Yeah, so I have an ascending level of support. Currently would be at 330, 335, around there. But realistically, if you break under 315, you have a last support at 227. Juice is 74, sorry. And
Okay.
then pretty much nothing.
Cool. All right. Well, thank you very much for the heads up, Verde. So anyway, what I was going to point out was that right before Redbox took off, there was this big hump in its interest, and there was some volume, just not much, just a little bit of volume that came into it, and then it tapered off. But right before it really got cruising, Netflix collapsed. It collapsed over the course of the trading, about 2 trading days from April 19th to the 20th, and the very next day, or at the end of the day on April 20th, a whole bunch of money just poured into Redbox Entertainment, and the volume surged on it. What I suspect is going on is speculation that streaming services are losing money and customers, especially because especially because Netflix decided to add advertisement to its subscription model, which makes no sense at all. But their decision to do that has alienated a bunch of their customers, and on top of that, Netflix has gotten more expensive for people, so it's become out of reach. Redbox DVDs are still like $5 or $8 just to rent a movie for a week. People still have DVD players, and anybody with a computer has a DVD player, honestly, or an Xbox or a PlayStation. Like anybody with a game console has a DVD player. So it makes sense for Redbox to take up some of the market share that services like Amazon and Netflix and Hulu are leaving behind, because, and especially with Netflix collapsing, there's a whole bunch of investors that are looking to move their money elsewhere. And if they think that streaming is about to collapse, then guess what takes over in the entertainment space? DVD rentals, game rentals, and movie theaters. So this goes back to the AMC play. And Redbox Entertainment was already heavily shorted into the dirt before this move came. So there was a huge amount of short interest before it even made this move. The short interest of free float was 40% the day before it surged. And it's only gotten bigger since then, with additional shares pouring in from the short side. This stock has been maximum utilization for Jesus since March, since late March. It's been maximum utilization. So wherever these shares are coming from, they're not coming from genuine lending. They're likely coming from some other source of liquidity, such as a market maker. If you look at the lending volume here, the last several weeks of lending have shown a massive surge of short interest coming in out of nowhere, but the stock isn't slowing down. And right now, the shares on loan pretty much still on par with what is actually shorted. So yes, shorts are pouring in, but they're trapping themselves as they're doing so. And with the amount of shorts that have already been in this position, especially the ones that are now operating at a loss ever since February, now they're paying an exorbitant cost to borrow fee at 300% CTB for the year.